All righty, so we are back, and today I have Chad Daniel, good friend of mine here in the Midwest. Don't always run into a lot of Midwesterners, as you know, in this space. Oftentimes, our clients and things are on the coast, so it's nice to connect to somebody close by. And the reason for the video, I guess, and Chad, I'll let you, of course, chime in, but I know a lot of your clients at Turnkey, Iowa have had questions, and our clients as well, quite honestly, about, stock market investing versus real estate investing, so on and so forth. And so, my goal here is to just run through maybe a few of those questions that really come up with your clients a lot, but then also get a little bit of information on your market, as others are branching out, me being one of them, and looking at other markets that maybe aren't on the radar as much, I guess, if that makes sense, and get an idea what else might be out there specifically through you and your team and family, I guess. I know it's a family business. So thanks for jumping on, man. Why don't you kick us off?
Yeah, that sounds great. Well, first of all, thanks for having me here. And I've talked to hundreds of different investors and potential investors in real estate, and a lot of the same questions come up again and again. So I've been answering those questions. I thought it would be great to get an experienced perspective like yours today. So I'll go through a few of those questions. You can answer them. If you have questions back to me about the perspective, or if you hit the nail on the head or not, feel free to do that too. So one of the first and biggest questions I get from new real estate investors is, why would I invest in real estate rather than something like the stock market, a very traditional, 401k type investment, and one of the easiest things to do? Why would I venture into real estate? It's
such a good question, and Chad, quite honestly, we could probably spend an hour talking about it, and maybe we will next time I'm up in the area. It's, for me, it comes down to really probably two major things that really snowball into many others, but the ability rather to leverage real estate, meaning taking out a loan, and not have to pay in all cash, really can maximize the return on the investment you're making. Good example, let's say you have $20,000 to play with, just to use simple math. That could help you control a $100,000 rental property, for instance, and capturing all the advantages of that $100,000 property appreciating and so on and so forth. That $20,000 only buys you $20,000 in stock. So you're able to control a much larger asset. That is probably the number one reason, in my opinion. Along with that, though, I would say another big one is the tax advantages that come into play, depreciation, things like that, that you just unfortunately do not have through the stock market. Those are big ones. The ability to pay down the principal over time, or I guess your tenant pay down the principal on the loan. That's how you're creating wealth month in, month out, year in, year out, and not paying a tax bill all along the way. That's what I'm completely fascinated by, Chad, is each year, if you have a number of properties, let's say you're paying down $20,000 in principal on those loans, that's not all that many properties at the end of the day. That's $20,000 in wealth creation that you're not paying a tax bill on year in, year out. Now, of course, ultimately, when you go to sell or whatnot, you will, but that's what I'm just absolutely, fascinated by, is that wealth creation over time that, you're not looking and seeing it in your bank account, but it's showing up on your financial statement, and you're keeping all of it every year, all of that wealth creation. So, again, a lot of different ways we could go with it. And I don't know if you have anything to chime in, because there's so many other advantages, but to keep it simple, I would say those are the main points.
Yeah, no, awesome answer. And you know something about the leveraging up of real estate with the loans that you provide, right?
I may be biased, and I always tell people that, that is what I do for a living. But in my personal life, I live and breathe the same thing, as I know you do too.
We do
I'm
as
well. I'm not a salesperson. I'm fully bought into it as well.
Yes. Yep. The leverage possibilities with real estate are awesome, and you can always deleverage as well, right? If life changes, if your personal situation changes, if rates change, whatever, you can make deliberate choices to adjust that leverage as well. So that's
Exactly.
a really nice advantage. You
Absolutely.
had also mentioned being able to defer taxes. So a lot of times on rental properties, as you mentioned, you don't have to pay taxes on those earnings each year because of the depreciation that can offset it. That's another sort of free loan, if you will. So rather than paying, let's say 7,000 on the $20,000 in profit, you get sort of a free loan from the government of that $7,000 to reinvest or do with what you want, as you mentioned, until you sell or until you pass away and there's a step up
Exactly.
cost
And then it's
basis.
not your problem. Yeah.
Yeah, right.
Well, and it just,
Uh,
Chad, and I'm sure you have the same experience. It just snowballs over time. That 20,000 becomes 25 and 30, and I tell you, I bought our first rental property in 2006, and that piece of it alone has just fascinated me over time. I look at it, I'm
yeah,
like, and I remember at one point we would pay down about 100,000 in principal every year. And I thought, if everything else goes bad, if I don't make any cash flow, if my day job doesn't go well, all these other things, I still created 100,000 in net worth or an income, so to
yeah,
speak, doing that. And it's on
yeah,
paper, of course, but you're not incurring a tax bill as you do that, and just fascinating to me
yeah,
overall.
yeah. And the exponential growth is amazing. I mean, you start out, hypothetical example here. I don't know if it fits your situation, but if you buy one property in 2006, in maybe 3, 4, 5 years later, there's enough equity in that property. You've collected enough cash flow that it can produce another property. So now, without putting any more money in, your one has turned into two, and now we're in 2011. Then 2016, that two turns into four. 2021, the four turns into eight. Like, and right, the snowball
100%.
accumulates speed even without putting more money in. And if you are putting more money in, more investing, of course, that adds snow on top and accumulates itself as well.
And I can honestly tell you, and then we'll jump. I know you had a question about REITs, but
Yeah, yeah,
for the first, so that's been what, 17 years now that I've been at that. I can tell you the first 10 years, and that was up to probably, call it 50 properties. I didn't have a single dollar of my own money in it. It was all of that was created by exactly what you described. And it doesn't happen overnight. It doesn't happen next year. All of a sudden you look back at 5 years and you're like, wow, got all this equity. I can use that and buy more. And that equity was, I say it half jokingly, but I believe it's true, like creating equity out of thin air, meaning you didn't have a lot of capital or a lot of money to start with, but you're able to grow something like that, even in the absence of a lot of
yeah,
start money, so
yeah.
super cool. So what,
Yeah.
remind me the question you had about
Yes. So,
REITs,
so
because obviously a different game.
yes. So investors, okay, may have decided to invest into real estate. Maybe that decision is behind them. Okay, there are options all the way from a REIT down to buying and owning and managing your own rental property. And there are
Yeah.
syndications and other things in between. How do you look at those different ways, those different options to invest into real estate?
I look at it, Chad, as how passive do you truly want to be? And even in the case of Turnkey is incredibly passive, but there is still some accounting, some bookkeeping, some entity setup, some of that sort of thing. I look at it as if you just want to, put the money in and not think about it until you get the money back or a dividend or whatever, then I think a REIT or a syndication is can be great. I have not ever personally been attracted to those because I believe you can create better returns through just owning that rental property yourself. Now with that, let's be real, it can come with some work, and the value of having a turnkey operator like yourself, it's a heck of a lot less work if I'm the buyer, but Again, in my experience, to do it correctly, you still do have to put some time into it, more than you would for a syndication or a REIT. And
Yeah.
those are the different. I'm convinced you can get better returns by and large by just owning individual property yourself. But it's, where do you want that level of involvement? And a REIT and a syndication can free you of pretty much any involvement. I just don't believe you can manipulate the returns quite as much.
Yeah. Totally makes sense, and I agree. If you are investing in a REIT, there are a couple layers of people making profit between you and the property. And those people also manage the property, and it's not like they're just skimming off money for nothing, but
Sure.
they're doing things to manage the property, to manage the portfolio. But yeah, there is a lot of profit leakage that happens there. Syndications, they have their own set of work to make sure you're working together with someone you trust. And
yeah, you're
there's
putting
a lot of
faith
vetting
into
there.
that. Yes.
Yes, right. But yeah, exactly as you mentioned, if you're owning the real estate yourself, there is more work. There's more decisions, right? Do I want to refinance this place? Do I want to pay off my loan? Do I want to have it vacant for a month or two and do a renovation? Those are all questions that you should be thinking about. Now, do you have to think about them every day? No, but you should be thinking about those to optimize how your property is working for you.
100%, man. Yeah, I look at, and I know they're not the same, but I look at REITs and syndications more as a stock market investment, quite honestly.
Yeah.
And obviously there's differences, but in terms of the passive and some of the other things, I look at those as pretty similar overall. So, as far as buying, a good time to buy real estate, I know that's
is it a good time to buy?
Literally, I think you ask me that every time we talk. I don't think there's a bad time to buy personally. Now, again, I always put the disclaimer out there. I do lending for a living, and I am literally buying properties right now. And so please take that for what it's worth. Is there a crash coming? There could be, so on and so forth. But I truly believe it's time in the game and not trying to time the game. And for that simple fact, will I just run out and buy anything right now? No, but I wouldn't do that if rates were 3%. I think there's opportunities still, even in higher rate markets, and a pending crash coming or whatever your belief might be around that. I still think individually as an investor, there are still properties out there to buy that make sense. And I also think that it's the time that you have on your side, and if you wait 5 years for rates to be the best they're ever going to be, if that's the belief you have, you missed out on 5 years. And Chad, you've been doing this long enough. I look back at the last 5 years, or when I first started, I looked at those first 5 years. It's amazing what you can do just in that 5 year period, and when I first started buying, rates were about where they are today. And I can honestly tell you, sitting here today in 2023, my only regret is I didn't buy more. Now, I didn't know that those were high rates because it's all I knew. But that truly, I wish, as a 42-year-old sitting here looking back at it, I'm thinking, man, I wish I would have. I don't know that I could have, but I wish I would have bought even more, at those rates. Seeing it all play out. So, and then in terms of, is it harder than buying stocks? Because I know that was one thing we were kind of talking about. And yes, I mean, the reality is yes. You can open I don't even know if Robinhood's around anymore, but you can open an E-Trade, an Ameritrade, or TD Ameritrade, whatever. You can open one of those accounts, and it's almost too easy to be an investor. You don't have to know anything about the company. You really have to do nothing other than click a mouse, decide you're going to buy Apple today or whatever the hot stock might be that day, and it's that simple. Real estate is not that simple. I think you need to do your due diligence. I think you also need to find somebody like you. If I'm totally green, and just getting started, I want to plug into guys like you and I that have that experience, that can hold my hand and say, here's why I would do this. Here's why I would not do that. that type of thing. And, so there's a lot of decision making and a lot of thought that goes into that. Which market do I want to be in? Do I want duplexes or single families, so on and so forth? So there's definitely more work involved in buying real estate. To me, it is significantly worth it. The payoff is worth the time invested. There's no doubt about it. And the other thing I would add to that, and it's hard to really put a number or a metric or anything on it, but there's something about real estate being tangible that is more comforting to me. There's not a rogue CEO. I went to college. I think you're about my age, but I went to college around the time that Enron was blowing up. I was in accounting school and talking about Sarbanes-Oxley and all these things that they were working on to clean up corporate America, basically, rogue executives just using companies as their piggy bank at the expense of stockholders. And yes, I can have a vacancy, I can have a bad tenant, but I'm not putting all of my faith into somebody that I don't know who they are. And at the end of the day, I may not have anything. With real estate, I at least have a tangible asset there at the end of the day. And I love that piece. That part of it, the fact that I can get in the car and drive on Saturday and look at rental properties, or take a trip up to Des Moines and poke around and see where my money is. That seems to be more comforting to me than to go to Wall Street and try to schedule an appointment with a CEO there and ask them about the company. I just don't think it's just probably not going to work. Yeah,
yes,
for guys like you and I don't think that's an opportunity, or an option.
I think you're right. I've not tried it, but I think you're right. I don't think we get our meeting accepted.
I think we would end up with a nice vacation, but probably not a whole lot of productivity. In terms of meetings. So, so I appreciate you bringing those questions up, and more than anything, I really wanted to, those are questions for both your audience and my audience. I mean, those come up constantly, and it's always nice to get a little fresh perspective on it. What I wanted to kind of wrap up with you on is I'm doing my best for myself, but also for our clients and future clients, so on and so forth, to learn more about various markets. And admittedly, and I mean this in a good way, I think your market flies under the radar a little bit as I'm talking to investors, as I'm going to some of the conferences and events. I wouldn't say the talk is about Iowa, and for that reason, I really, if you could just spend a couple minutes kind of bring us up to speed a little bit on why would somebody buy, in Iowa,
Sure.
and specifically with Turnkey, Iowa.
Yeah, sure. Well, first, a few basics on Iowa. It's Iowa, not Idaho. Some people get those mixed up right away. Lots of corn, not so many potatoes here. But Iowa's a big agriculture state, a big financial institution state, and has a lot of rural area. We have two major metros, I'd say. One is the Des Moines metro, just under 1 million people today, and growing like crazy as we have a lot of influx of people from the more rural areas into the major city in this area. So Des Moines, with a little bit under 1 million people, is not one of the biggest metros around, right? We're not making the headlines very often, but has had really attractive buy and hold real estate opportunities, at least for the 15 or so years that I've been doing this. Des Moines then, so zooming into Des Moines from Iowa, Des Moines has a really interesting mix of industry. So you have ag and construction, manufacturing industry. You have food industry, healthcare, and a lot of, data centers and other stuff that just follows population now. Where you have population, you have Amazon warehouses and data centers and things like that going on.
So a lot of jobs.
A lot of jobs, yes. A lot of jobs. And in fact, I'm close by one of our properties today in an office, and I'm in Story County, which touches the Des Moines metro area. And it's been nationwide some of the lowest unemployment over the last 5 to 10 years. which makes it dang hard for manufacturers to get people, but a lot easier for our tenants to find and have jobs.
Yeah, of course. Our advantage.
Yes, this is good. I also mentioned financial services. So like you have Principal Financial, Wells Fargo has corporate headquarters in Des Moines, and many others where you end up with like the lower paying white collar jobs, just tons of them. And then more in the manufacturing area, you have the blue collar jobs. And so those are the tenants we really serve. And we serve them with higher end properties for the size of those properties. So we'll go in and do oftentimes a total renovation of a property, make it durable and good looking, and then get a renter in place. And we'll either hold that for ourselves as a long-term rental, or we'll work with investors, educate investors as you do as well, and try to find a good fit for them purchasing a cash flowing rental property. So we work with maybe 1/3 local investors based out of Des Moines, probably 2/3, you mentioned earlier, the coast, 2/3 from the east and west coast, where the rent to price ratio isn't nearly as attractive as the Midwest here. Work with those investors, find them properties that are good fit. Yeah. Maybe the last thing I'll throw in from a rental market perspective, Des Moines is a lot different than a lot of the other places where you have big turnkey providers. So we have around 30% renters in the metro area. And in some of those other metros, you'll go to whole neighborhoods or towns and it's well over 50% renters.
Oh, yeah, no doubt.
So those renters are kind of using the houses as apartments. And they move from one place to another much more readily than in Des Moines, where if they like a neighborhood, if the house fits their family at the time, they're going to stay there for a long time.
I love that piece and I'm so glad you threw that in, because I've not ever heard that angle, but I believe it wholeheartedly. Like, the best investments I've made have been the ones where the tenant stays for 10 years,
Yeah.
Or longer. I mean, there's no doubt. And I remember at one point, the first like 5 houses I bought, my tenants were there for 7+ years. Matter of fact, I sold one in 2019 that I had bought in 2008 with the same tenant in place.
Wow, yeah.
I should have never sold it at the end of the day. It's vacancy, in my opinion, vacancy is the killer. And, and just what you said, that's huge. If you can find the right tenant and keep them in place for, 10 years, 5 years, that's when it really does its thing, and you don't worry about vacancy. You don't worry about turning it over and, freshening up everything and so on and so forth. I love that. I'm glad you threw that in.
Yeah, tenant turnovers are one of the bigger costs due to the vacancy, and also clean out, repairs, stuff that maybe the deposit doesn't cover. It's one of the biggest costs in our rental properties. And so when we can avoid those by finding a good fit, being fair to the tenants, I think it works out really well for both sides.
Yeah, 100%, man. Well, I promised 30 minutes and we've got about 30 seconds left. So I don't want to take any more, but best way to reach you. How can people find you?
Yes. So personally, people can email me. It's chad@turnkeyiowa.com. So chad@turnkeyiowa.com. If you want to do a little bit of research ahead of time, it's www.turnkeyiowa.com. You can learn a little bit more about our background, our family, check out some past sales, check out some properties available now, some other educational resources. And we'd be happy to chat with you. I get a lot of satisfaction out of just talking with investors, especially new investors, and understanding their situation, and is real estate a good fit or not, what kind of real estate, and really getting specific on some of the questions we talked about today.
That's a lot of my friends like to talk sports. I'm like you. I like to talk real estate. So
yes,
well, man,
same.
Chad, thank you again, and I'll include your contact info when this goes out. But really valuable 30 minutes, and I know our audience will appreciate it. So thanks again for all you do, and we'll be in touch.
Greg, thanks so much. Have a great afternoon.
You too, man. Take care.
All right.